Some breaking news now. The monthly inflation indicator for August has just been released by the Australian Bureau of Statistics. Our business reporter Edward Boyd is looking at the data for us. And Ed, as expected, it looks like inflation is up. How big a jump have we seen?
Yeah, so the jump is to 5.2% from 4.9% in the previous month. So it was an increase between the month of July and August. A big factor here, which we've spoken about now for several weeks, has been the sharp increase that we've seen in oil prices over the past 3 months. Oil prices are up almost 30% over that time. It takes a bit of time for the price of oil to filter through to the petrol bowser. But that definitely happened during the month of August, and we saw petrol prices increase significantly, added to the inflationary pressure we've already got in Australia's economy. So just looking at the ABS stats, you can see the monthly inflation indicator did increase to 5.2% during August. If we go to the next page, we can look at some of the key price categories that the ABS look at, and you can see food and beverages is now 4.4% increase at an annual rate. It was 5.6% in July, so that got cheaper. Housing also decreased in cost. Fuel, though, you can see there, it was up by 7.6% in July. It's now up by 13.9%, which really shows the impact of those oil prices on our inflation figures. Health costs stayed the same at 5.2%, and recreation costs decreased slightly to 3.9%. So it's really due to the sharp increase in oil prices that we've seen. A slight increase in the monthly inflation indicator. The ABS today also said that electricity and gas prices, what Australians are paying at home, increased between roughly 12 and 13% at an annual rate during the month of August as well. So there are costs at home that people are spending a lot more money on those power prices and electricity, gas prices. So that's another input as well here, Ash, which has pushed up inflation slightly. And this is what economists were expecting. They were expecting it to increase, and it's come in as anticipated, slightly higher at 5.2%.
So considering it was expected, are we seeing much reaction on the markets yet?
Well, let's bring up some of the live charts that we can show you just to see how the markets have reacted to today's numbers. The ABS today in their stats did say that when you strip out some of the volatile items, things like petrol, things like holiday costs, the inflation numbers did actually go down slightly. So I believe the stock market reaction may potentially be not as bad as initially anticipated. So you can see in the last sort of couple of centimetres on that chart, the market has actually risen slightly. It was down by 0.3% before the inflation numbers came out. So it is actually on an upwards trajectory now in the last sort of few minutes or so. So the stock market's still down, but it looks like it is rising. If we go to the next page, we can look at the currency. This is the bond yield. The Australian bond yield has moved very slightly up to about 4.2%. Which is kind of anticipated here. If we go to the next page, we can look at the Aussie dollar as well. And remember, that's been at around 64 US cents for the last month or so. The dollar reaction today is probably quite minimal. So market reaction is actually not as bad as anticipated because, remember, the markets like certainty. We were expecting inflation to come in at 5.2%. That's what happened. So there hasn't been a sharp increase or decrease in stocks and the Aussie dollar that we would normally see when markets get taken by surprise.
Yeah, mortgage holders like certainty too, but there hasn't been a lot of that, of course, this year with interest rates.
No.
What are these numbers going to mean for Michelle Bullock? She's, of course, the newly appointed governor of the Reserve Bank, and she has some big decisions to make.
She sure does. So she only started a couple of weeks ago, well, on the 18th of September. And obviously, there's a couple more cash rate decisions coming up this year. There's one next week. Already, she's got a big cash rate decision to make here. The inflation figures today, if it had jumped substantially, then I think Michelle Bullock would have considered lifting the cash rate. But I've spoken to a few economists that believe we're going to need to see one more rate rise in Australia, probably in November, because by November we'll have the quarterly inflation figures from the Bureau of Statistics. Remember, today's numbers are the monthly inflation indicator, and they're not a true 100% accurate reading of inflation and the CPI index in our economy. But the quarterly numbers are, and they come out on the 25th of October, I believe. So that will give Michelle Bullock about a week or so to make a decision on where inflation's at in the September quarter for Australia before making a decision on the cash rate. So I feel like if there is going to be another rate rise, it'll probably come in either November or December this year. Obviously, the cash rate is already at 4.1%, and a lot of mortgage holders would love to see it come down. And it will eventually come down, but the question is, how long is it going to stay high? And I feel like with inflation where it is, the cash rate's unfortunately going to need to stay elevated for quite a period of time, Ash.
Ed Boyd, appreciate that analysis. Thanks so much.